Hey guys, welcome back to the Investor Army podcast. We have an absolutely amazing guest today. We're talking about markets that are too hot, that are hard to find deals in, and making sure we excel on every deal and maximize every dollar we make on each property. In order to do that, we have to pick the right exit strategy. So we have a businesswoman out of Dallas, Texas, a powerhouse businesswoman. She is doing awesome here in the Dallas-Fort Worth Metroplex, doing a lot of big things. I'm excited to introduce to you Ashley Cash.
Hi, Connor. Thanks so much for having me on the podcast today.
I'm glad you could be here. So I understand you're doing a lot of stuff down here in the Dallas-Fort Worth market, and you're doing a lot of different exit strategies. And one of the tough things that a lot of investors are trying to do right now is find deals. But when they find a deal, some of them aren't maximizing on that deal because they don't know what to do with that deal as far as which exit strategy to go with. And I know right now you're traditionally doing a lot of rehabbing, but you're also doing a lot of other things that we're going to kind of touch on all those different exit strategies that you're doing. But let's quickly talk about your rehabbing business and kind of what you're doing down here and how you see the market going and kind of the price points that you're working with and some of the stuff you're working on here right now.
Okay. Well, as you said, I'm in Dallas, Texas, and that's where my office is located, but my marketing is all over the Dallas-Fort Worth Metroplex. When you're in a really hot market, sometimes you need to go further and further from the center to get in areas where you can find better deals. I've also found that you can't limit yourself to any one exit strategy in a really hot market. You've got to be multifaceted. You've got to leave your options open. Every lead that comes in, you've got to look at it, you've got to vet it, and then you've got to pick out not one, but sometimes up to 3 different exit strategies for that particular property. And then you go with the one that makes the most sense. At any given time, I might be looking at 12 or 13 different exit strategies in my market. As you said, I've been flipping this year, but I've flipped fewer houses this year than I did the year before. I've done more prehabs this year, because it is such a crazy market. It's totally a seller's market. Well, once I buy a house, I've then put myself in position to be the seller. I can just clean it up, list it on MLS, and usually net the same as if I'd done a 6 or 8 month rehab. So, just being multifaceted in a really hot market is critical.
So guys, kind of what she's pointing out there is if you have the money to close on a house right now, sometimes instead of going through and putting that extra energy in and flipping the house, she's literally just closing on the property and listing it. It's also called a buy and list, or some people call it wholesale. And it seems to be a good strategy because I've been doing quite a bit of this as well, and we've been doing it on some lower price point houses. Are you doing this in every market on all different price points, or how are you kind of looking at which ones you're going to prehab versus which ones you're going to rehab? What's your, do you have for me and my business, we have a multiplier. So if I can wholesale a house for 10 but flip it for 30, I just go ahead and wholesale it because I can use that extra time and energy to get more deals. How do you kind of go about deciding which way you're going to go with one of these deals?
Well, I think what you said is a pretty good, a multiplier. But sometimes it's that particular neighborhood, what's happening in that neighborhood. When you walk up and down the street and you just see, investor after investor flipping houses, and I can list it or even wholesale it to another investor and make $50,000, $30,000. I'll do that, scale my money and put my money into some more deals. There's so many different things that you have to look at, right? How much do you think you potentially can make on a wholesale or a prehab versus how much are you going to make if you were to flip it? How much risk are you taking? How long are you going to have your money at risk in that property? What are you going to find when you open up the walls? So if I can, prehab it or wholesale it for $20,000 and I do a 6 or 8 month rehab and net 40 or 50, I'm going to wholesale it or prehab it all day long, and just move my money into the next deal. What I've been doing lately is when I buy a house, oftentimes my seller will stay in it for a few days, maybe even up to a few weeks after I buy it. I'll put a dumpster out for them. That costs me $300 to $600. I've usually held some money back at closing on their lease back. And I've written in my lease back that they have to leave the house, free of all personal possessions and broom swept clean in order to get their deposit back. And so I put the dumpster out there. They clean it out for me. All I then have to do is bring in a cleaning crew. And in a month, I've bought the house, cleaned it, relisted it and have it sold again. And I'm usually netting somewhere between $20,000 to $50,000 on the prehabs. And it's just, I can do that one. And then the next month do another one, and the next month do another one, versus being that money being tied up for 6 months in one reno and only making 50 or 60.
Yeah.
So,
So the main points, guys, to take from that is duration of your capital in the game, right, out in the field, that you can't cycle, because the more you can cycle your money, the quicker, the more fluid that capital is, the more you're going to make on it at the end of the year. Plus, she pointed out a really good thing, risk, right? It's risky to get in these deals. If you've ever been doing a lot of houses, you're going to come into situations where you pull out the showers, find mold, you're going to pull up, the floors in a pier and beam house, you're going to get termites, and all sorts of issues can come up. And so sometimes it's better just to pocket that quick money and go. Plus, you can take that same money and put it back into another deal real quick. So kind of what we do is we put it up there and test the market. So we get a house, we do the exact same thing. We gut it, or we don't really gut it as far as a traditional gut, but we'll pull out the cabinets, we'll pull out everything. We'll kind of get it ready, because a lot of these houses an investor is going to buy anyways. And then we'll put it on the MLS and we'll see what the type of activity we get on it. And then if we don't get what we want, we then go through and do the rehab. But if you can just get in and out, that's the best way to do it. And a lot of times you're seeing, I'm sure you're seeing this too, that so basically what you're doing is you're wholesaling the property through the MLS if it's to an investor type of property. And even after you pay your closing costs and your flat listing and your realtor fees, you're still able to find a buyer, because the MLS is the world's biggest buyers list that will pay more than a traditional wholesale buyer, because there's a lot of people that are paying really high prices. They're speculating, and you can still net more and wholesale through the MLS that way. It's kind of what you're doing, right?
Yeah, that's a lot. A lot of the buyers that I'm finding are other real estate investors. Occasionally there's a retail buyer that's, willing to get in there and see a diamond in the rough and do their own renovation. But most of the time it's some newer investors, I would say.
Yeah. So there's a lot of individuals that are highly successful, highly well educated. They run successful businesses and they have a lot of money, and they heard real estate's hot. They hear that buzzword and they want to get in. And they may not be trained as far as how most of us here are trained to understand how to buy at the right numbers. And they may buy a house simply because, they think it's a good return, and they may pay 100 cents on the dollar for the house. I've had a lot of people, I've had one lady tell me that she bought the house because it was cute as her criteria for buying an investment property and paid full market value. So there's a lot of opportunity to go about it this way. And also, guys, point out real quick, if you buy a house and you close on it and it's clean, it's decent, and it's, the cabinets are all right, but, you're thinking traditionally you need to update this house, go ahead, while you already have it and you already closed on it, go ahead and put it on the market and just see what you can get for it, because it may surprise you right now. There's a lot of competition. There's a lot of people desperate to get deals, and you may be surprised with what you can get for it.
Right. I mean, the first time I did it, I wasn't going after investors. I was putting it on the market for a retail buyer. And it really shocked me that it was investors who were doing a bunch of the buying. But some of them are people who are going to keep it as a buy and hold. And, as long as the rents justified them paying an extra amount for it, they're fine with it. I don't want to sell something to an investor that's going to get them in trouble. That's not why I'm doing that. But I'm hoping for a retail buyer that it's going to be able to be somebody that has a vision and can make it their dream home.
Yeah. Have you been seeing a lot of foreign buyers coming in and buying these properties? Because a lot of people are moving here. They can't even buy real estate in some of the countries that they're at. And then the real estate they can buy is so ridiculously overpriced. Same thing for people from California. They come here and they're just like, wow, I can't believe they think they're getting a steal. But to us, we've been conditioned by the marketplace, being here, living in it day to day, that we're seeing things from our point of view. And to them, they're getting a really good deal in their mind as far as cash on cash return.
Yes, I've had several foreign investors from China, India, different places like that, who've got a lot of capital and would like to put it in a more secure asset base in the United States. So yeah, I'm definitely seeing that.
So are you selling, you said you're selling, so you probably have a combination that you're selling to cash buyers, investors, but you're also selling these prehab deals to individuals who are getting financing from banks. And are you dealing with any appraisal issues with this, or?
I haven't had any appraisal issues lately. I mean, most everybody has been coming in with cash.
Yeah.
So that hasn't been an issue with the ones I've dealt with. A lot of the houses, they might need some foundation work or some roof work or something like that. And that's another thing that I have been doing a lot this year is I've been having a lot of roof work done because we've had so many storms here in the Dallas area. And I've been having my sellers actually make their roof claim and get the roof fixed prior to our closing. And just going ahead, and I'll pay the deductible if there is one. My roofing company is awesome and really helped me out. And that's something I would highly suggest other investors look into, especially if you live in a market where there have been a lot of storms.
Yeah, that's a really, really good bit of advice for a lot of y'all. So probably go back and listen to what she said again, because if you're doing a lot of deals, that can add up quite a bit. Now, I know you're doing a lot of rehabbing, prehabbing, but you also, I know you're into the owner financing world, and you're really good at making creative offers. Can you kind of tell people kind of like a basic breakdown of a normal bread and butter type of owner finance deal that you're doing? And I know that you're doing what most people can't do, which is going direct to the seller and negotiating owner financing from them, because there's two sides of the owner financing. You can either get it from the seller and buy it on owner financing, which is what I like to do, and then selling on owner financing. But not everybody can find the long-term capital on the front side. So it's really important to be able to negotiate these deals with the seller on the front side. And I know you're really good at that. Can you kind of touch on what you're doing there?
Right. So several years ago, so we all talk about scaling our business, right? That's where you only have a certain number of hours in every day, a certain number of hours in every week, a certain number of hours in every month. And in order to do more deals, you bring in more people, you automate your systems, you help scale your business. Well, there's also scaling your money, right? You've only got a certain amount of money to be able to invest. Well, if you take $200,000 and go out and buy one house for $180,000, you're going to be able to do one deal. But if instead you ask for owner financing from your seller, and I happen to have stumbled upon a pretty cool deal where I can help some of my sellers protect their money from Medicaid spend down by taking it from the asset side and moving it to the income side. And so I can help them, which is always a win-win situation, which I prefer, get income over, the latter years of their life. Well, that helps me scale my money, right? Because instead of me having to plunk down $150,000 for one house, now I only have to pay $852 a month. Well, that $852 a month, I can then turn around and rent that same house for $1,600 a month. So it allows me to take that same money and spread it over multiple houses by getting owner financing from the sellers. I don't know if I totally confused everyone with that. If I had my big whiteboard behind me, I'd be able to explain it a lot better.
We'll let you come on the YouTube channel and do a whiteboard presentation. So there's a number of different things once you get that financing in place, because guys, so y'all may be able to raise money fairly well, but if you're not financeable, a lot of times, how are you going to get a loan? So you can get if you can negotiate owner financing and you're good at doing so, you can wrap these houses and turn around, sell them on payments and wrap that loan. You can turn around and rent it. And I know you even do this where you actually just keep the financing in place and then rehab the house, leaving their financing in place, because if you don't have to go get a hard money loan, pay those points up front, pay those origination fees. It just increases your bottom line as far as how much you can make. And a lot of these homeowners, they'll let you partner with them on the deals. Sometimes they'll partner with you, they'll leave their loan in place and you do the rehab, or there's lots of different ways you can work it out. Are you doing anything similar to that or with these homeowners?
Yeah. So I ask for financing on every single deal, whether I'm going to prehab it, whether I'm going to rehab it, whether I'm going to keep it as a buy and hold, whether I'm going to owner finance it to a third party. Every time I'm buying a house, I ask to either take over their payments or to have them owner finance the house to me. And sometimes I even use mixed strategies where they might have a small loan that I take over the payments on, and then they owner finance the balance of their equity to me. But it allows me to buy more houses in any given year, because say my $1 million will only buy 10 houses at once, but on payments, I could buy 30 or 40 houses in that same amount of time. And by getting that financing up front, it also opens up more exit strategies to me, right? It allows me to keep a property as a rental property. It allows me to own or finance one. A lot of people ask me, how do I decide if I'm keeping it as a rental property or own or financing it? Well, for me, it all depends on how much of my capital I'm going to have to leave in that property. If I'm going to have to leave a lot of capital in that property, I may own or finance it so that I can get some front end cash with the down payment back, and then make long-term money. Another factor that I consider is it in a highly appreciating area? Well, if it is, I may keep it as a buy and hold and pick up the appreciation over time. Whereas if it's not in a highly appreciating area, that's a property I'm more likely to owner finance to a third party. But by being able to scale my money and therefore buy more properties over that year, I can then also consider a lot more and different types of exit strategies, and just really be able to maximize every single lead and maximize the profit potential on every single deal.
Yeah. So she gave you all a lot of really good information. I told you guys she was smart, right? She's giving you all some good stuff. So typically on every house, do you go in? I know like Jim and a lot of us that we typically have like 4 to 6 offers that we have structured out that we kind of just put in and go for it. Or do you kind of go in and just handle the situation differently by the mood of the situation with each different seller? Because everybody's going to be a little different, whether you're negotiating with a 30-year-old young man or a 65-year-old woman, right? You're going to have to approach the situation differently. Also, you're going to have to reflect as who you are and your presence walking into the house. And so the way you're going to interact with someone is going to be different than the way I interact. And so you have to be aware of these variables as you're in the business, especially when you're doing something as, I don't know, what's the word here, intimate as trying to get a owner financing deal, because it's not as simple as these big guru companies say, just go throw a 40% offer, get the deal. But the power of doing this is so strong in your business. Like she says, you can just increase your deal flow with the same capital involved. So are you coming in with stock offers, or how do you kind of go about the process?
A lot of my leads come in via phone, right? And myself or my assistant or my partner take the phone call, and we try to start building rapport at that very second when we take the phone call with the seller. Try to get as much information from them on the phone as we can. Let them talk as much as possible. We need to listen more than we talk to be able to really pick up on what their true need is. What is their problem? Once you know what their problem is, you can start then thinking about some options. Then you've got to look at the numbers, right? You got to know what the ARV in that particular neighborhood is for that particular type of house. You need to know what the potential rental comps in that particular neighborhood for that particular kind of house are. So yes, prior to going on a site tour to go see a house and meet with the seller in person, I usually have a little bit of information from the phone call. I can look up some more information on the internet, and then I know what my numbers are. I usually always walk into every seller's house with 3 offers, at least in my mind, if not on paper. But while I'm sitting there with the seller, I'm never at a seller's house for less than an hour and a half. I'm there, I'm building rapport for a long time. And that, I think, is what really gives me the edge over a lot of investors, is I take the time to listen and get to know the seller and really find out what their needs are. It also gives me time to build a trust factor with them. They get to know me as well. I tell a lot of stories on myself. I tell a lot of funny things about myself. I talk a lot about my children, my family, and they kind of get to know me. And I think that gives me an advantage too, because they have more confidence in me by the time I get to the point of asking them, hey, would you like to owner finance your house to me?
Yeah.
They feel like I'm the girl next door.
So you guys heard it. Y'all better step your games up. That's what I'm saying, because a lot of y'all just want to be in and out, walk in, not have any emotional relationship with these homeowners. And because you guys have to build rapport. If someone's going to finance their house to you, they're not just going to do it to someone that just kind of came in and out real quick. You got to, like she said, build a relationship with them. Now, so I see this, a lot of people that start making owner finance offers, they get frustrated. Most people don't like rejection. Believe it or not, people don't like to hear rejection. So kind of give people a realistic expectation of what they can expect, because most people try it a few times and say, this does not work, I'm not going to try it again. And then they never try it again. So what's your percentage of houses that you go into and pitch an owner financing offer that you're actually contracting, that they can kind of have some type of realistic expectation as they know they're going out there in the field, so they can kind of, have something to have some base with?
I think when I first started, I'd probably get about 1 in 15 offers accepted for some sort of financing. As I have developed better skills, and really, I would say my best skill that I have is listening. As I've developed that skill, I'm probably getting about 1 in 5 now.
Wow.
That doesn't mean that I don't get rejected. But what I always do, you brought it up earlier, is I'll make them a cash offer. I can pay you $100,000 cash. Well, if you let me take over your payments, I can give you $105,000 cash. But if you let me take over your payments and you owner finance the balance to me, I can give you $110,000, $115,000. Because the reality is, when you are paying with terms instead of a big lump sum of cash, you can afford to pay more for the property. That also gives me competitive advantage over most of the people who are just making cash offers.
Yep. So are you going in offering 0% interest? Like, I know that's our first offers. We don't even bring up interest rate. Are you just, what types of offers are you making as far as kind of what you're giving them?
Well, a lot of it depends on what the need is of the seller. I mean, I just can't stress that enough. I mean, an example was I had this little lady who was living in assisted living, and she'd been trying to rent her own house out for 2 years because she needed an extra $800 a month in order to pay for her assisted living. So what was her problem? Her problem was she needed $800 a month for the rest of her life. Wasn't $80,000 today, right? $80,000 today was going to last her, less than 10 years. Well, she was only 66 years old. She had a lot of life left to live. Her concern was having $800 a month for a longer term. So I actually made her 2 offers, and I calculated the offer by calculating for an $850 payment a month, right? So it all came down to, over 15 years, I could pay her on $100,000, I could pay her 6% interest, or I could, pay her $850 over, 30 years. She chose the 15 years. And so we did a $100,000 loan at 6%. And some people are like, oh my gosh, 6%. Well, it was still a really great deal for me because I was only paying her $852 a month, and I was bringing in $1,600 a month in rent. So it's not always, the issue was how much she needed a month. I didn't care that I was paying her $600 a month. I was still going to be pocketing $500, netting $500 a month after, tax PITI. So it was still a good deal for me, and it was a good deal for her. Yes, I do oftentimes start off with a 0% interest loan, but at the end of the day, I've got to meet their needs. I've got to figure out what their problem is and make my numbers match accordingly. As long as the numbers still work for me, it's still a really good deal for both parties.
Yeah, and guys, kind of what you're picking up there is a lot of the individuals she's helping are in that third or fourth quarter in their life. And I know a lot of individuals that I talk to say, well, how am I going to offer an owner financing offer to someone who's later in their life? They're not going to ever take it. And last year, we had a woman finance her house to us at 85 years of age, right? And it had nothing to do with her. She wanted those payments for her children when they go forward. So it may not be that they're thinking of themselves. So go ahead and make those offers, because you may be helping her or their family. If they don't need that money right now, why not make more over the long run? That's kind of how I see it. But
yeah. So
she's actually doing a great job for our community out here. She's helping individuals in a situation where they wouldn't know what to do otherwise, right? So she's doing a great job out there. What do you think is coming here in Dallas-Fort Worth? I know a lot of people are panicking. Are we going to have a crash? What is your take on this? I like to ask people this. What is your take as far as what do you see coming over the next few years, and what do you think is working as far as marketing for deals is what always people want to know? Those 2 questions.
Don't we all?
Yeah.
Well, Dallas-Fort Worth is in the 6th year of our upcycle, and historically upcycles are 3 to 5 years. So, we've definitely outlived the normal cycle. But Dallas is in a unique position to a lot of the country because we have so many jobs moving here. You referenced so many people coming in internationally, so many people coming in from California. We've got lots of new industries moving to the city. That's definitely helped sustain us. Now, I'm not sure how long we can sustain this huge amount of growth that we've had.
Yep.
I anticipate probably in the next year there will be some sort of pullback. I don't know that it's going to be a huge crash, but I'm definitely preparing. I don't think I'm taking on as many big renovation jobs. I mean, I do renovation jobs on $60,000 houses, and I do renovation jobs on $800,000 or $1 million houses. I'm probably not taking on as many of those big jobs unless I can do them really quickly. I just don't want to leave that much money out there hanging on any one deal right now. But I don't think it's going to be a huge crash, but I definitely think I'm being a little bit more cautious with things that are going to be more than a 6-month project.
Yeah. What do you think for new investors out there? Because a lot of people that are listening to podcasts out there are just trying to get their swing in a groove. They're trying to figure out the business, which way to go. And a lot of them are having trouble marketing and finding deals. Do you think there's anything that's working more now than was a few years ago? Or do you see a trend? Or what do you kind of think is going forward? It could help these individuals.
Well, I see a lot of new investors that are out there listening to a lot of the, come to this half-day course guru. And, all of them are doing little bitty yellow postcards. And they're all doing yellow letters. And, I have a double major in business and Spanish. And, marketing one-on-one was differentiate yourself, right? So if you're buying a list that everybody else in your market can buy, well, you're not differentiating yourself. If you're sending out the exact same kind of marketing piece as everybody else in your area, well, you're not differentiating yourself. Now, new investors probably need to be buying a list because they don't know how to create their own. So if they can't change that, then they need to change their marketing pieces. They need to be more unusual. Be more unusual in your bandit signs, change the color, make a bigger bandit sign, make a crazier bandit sign, have somebody stand on the corner and spin your bandit sign. Drive your bandit sign around on cars, but also change your marketing pieces. Do something really unexpected. Instead of sending out 3,000 yellow postcards to 3,000 people that everybody else are sending, well, drill down on your list to about 1,000 and send out something that costs 3 times as much as that yellow postcard, right? But make it be unusual and different. Stick a lifesaver in a letter and say, hey, let me be your lifesaver and save you from foreclosure. Well, when they get that envelope with a lifesaver in it, they're going to be like, what is that? It's going to make them open it just because they want to see what it is. Just do something different. Don't do the same thing that everybody else is doing. I mean, that's my best piece of advice. Just be different, stand out from the crowd.
Yeah, and that's definitely true. When you put something in an envelope, people have to feel and have to figure out what's inside. It's just human nature. They're like, I got to know what this is, right? Another thing we do, I'm trying to look around. Normally I have one by me. We have stamps. Like we get stamps, ink stamps that we put on the outside of our yellow letters so that people read it on the outside. So, basically stands out, and we hit it with a certain title tag or keyword phrase that kind of attracts their attention. So guys, what's going on right now as we go towards the top of the market, we're going up towards the top, we're cresting, inventory levels are decreasing, retail buyers are competing against investor buyers, and you're seeing this push, like Ashley just said, of new investors coming to the marketplace. Why is that happening? We have all these HGTV shows, flipping or flip or flop or whatever all these things are that are out there. So people think if they can do it, I can do it. So there's easier barrier for entry when they want to come in because all the education companies, all the podcasts like this one and the vlogs and the YouTube channels, all the home study courses. So as inventory shrink, you're competing against retail buyers. And a lot of them right now are trying to get loans locked in because the big buzzword going on right now is what? Interest rates are going up. So they're trying to lock in properties right now with a low interest rate for the next 30 years. And so I've seen here in Dallas, I've been competing against a lot of retail buyers. And the reason is this. They're buying houses that they wouldn't have bought a few years ago because they're competing against other retail buyers. And that's why it's good for Ashley as a rehabber. She's probably getting a lot of overpriced offers and a lot of multiple offer scenarios. So these retail buyers are getting frustrated. So they're buying houses in lesser conditions that they would have before for other reasons, like I want to be close to the school district for my children. I want to be close to this highway system or by my job. And so they're buying on other variables. But in order to do that, they're paying, maybe 90 cents on a dollar for a house that we as an investor can pay 75 cents for. So you got to figure out how to go against the path of least resistance which is what everybody else is doing. Like she just said, they're all mailing the same postcards. They're all going through the same training. So what we've been doing is going after pre-life event leads. So we want to go after leads before people know that they're public, right? So if you go close on a property today, and you go check the county records, there's a lag time between when that information appears. Same thing with life events. So whether it's a probate, a divorce, foreclosure, code enforcement, whatever it is, we're trying to get to these people before. And so we're going pretty much door-to-door marketing in a lot of areas, heavy neighborhood canvassing, and seems to be what's working for us right now as compared to just mailing people. Also, if we are going to go for a public list, we're skip tracing them. So we're getting to these people day one when people are mailing them. So she gave you a lot of good information. You just need to do a little bit more work. If y'all think you're going to go in and compete against Ashley for a house and she's going to spend an hour and a half and you're going to spend 10 minutes there, who do you think is going to get the deal? So I think she gave a lot of good information on today's call. Go ahead and give one good piece of advice you can give new investors out there right now. And then if you want to give out your information, or I don't know if you're coaching or doing anything on some of those strategies you're talking about, I'm sure a lot of people would like to talk to you. And if you're in Dallas-Fort Worth, guys, you would not be a smart person if you didn't try to get to know Ashley. So I try to get to know her, be friends with her, or whatever you got to do, because she's really doing a lot of big things here.
Well, thank you so much, Connor. I really appreciate you having me on the show today. And I think one of my biggest piece of advice is, my gosh, take action, right? Get out there every day. The people who are willing to do everything you're not willing to do, those are the people that are going to win. Those are the people that are going to make it big and take it to the top. But, you can sit and you can listen and you can read, but if you're not taking action, nothing ever is going to change in your life. So that's probably my biggest piece of advice for everyone. Just take action, take another step forward, do something, make it happen for yourself. I do train and coach some new investors. I like to partner a lot with new investors and teach them through action. I like to strategize deals with investors. I mean, that's one of my favorite things to do. It's so funny. I got into real estate because I love decorating houses, and I can walk into any house and I can see its potential and what it could be. And very early on, when I realized I had to scale my business, that was one of the first things I had to get rid of, was the decorating part, right? It wasn't making me enough money.
Yeah.
But luckily, I realized that I really love strategizing deals and taking all the puzzle pieces of a deal and figuring out the best solution to come out the back as a winner. Not just for me, but also for the seller. So that's one of my favorite things to do. I'd love for anyone that'd love to talk to me or strategize a deal to reach out to me. You can contact me at 214-957-4176, or you can reach me at cx5homebuyers.com.
So I know you do a lot of joint ventureships with a lot of people. Are you open to doing this in other markets? Are you strictly doing it here in DFW, or are there certain markets around the country you're looking at, certain price point markets, low-end markets, high-end markets, or kind of what, so people know, so they don't just reach out to you without kind of knowing ahead of time if you're interested?
I primarily am doing business in Texas. And I have done deals pretty much all over Texas. I've done a few deals in Jackson, Mississippi, and a few deals in Ohio. On those deals, I'm either partnering on some buy and holds, because they're just some really unbelievable deals where, like in Dallas, it cost me $150,000 to buy a buy and hold. And in Jackson, Mississippi, they can have a fully renovated house for $30,000, bringing in $900 a month in rent. Can't beat that. So yeah, if anybody has deals like that, I'd certainly be interested in talking to them.
So what is it? You're looking for a joint venture partner, I guess, to be kind of the catalyst, because you're out here in Texas. If you're going to have someone in a low price point market around the country, you want them to find the deal, source the deal, kind of manage it there on the ground, get the deal rent ready, get someone in there and kind of do that side of the process. And you're going to, kind of help them on the knowledge, wisdom side of the best way to go about it. And you're going to kind of finance it. Is kind of that's what you're looking to do, or? That's
what I've been doing in some other outlying markets. Yeah. So, but I'd love to strategize any deal with anybody, just because I think it's so much fun. And just talk about, the owner financing or asking people for financing. Those are really cool deals too. And, in a lot of ways, you're able to really help those seniors, help them protect their money and have it for the rest of their lives, and potentially be able to leave it to their heirs someday. So. I appreciate you having me on, and I appreciate, everything that you do in the Dallas market. And it's really fun to be a part of the podcast with you. And, you're just having such great success in this market and nationally. And I'm so excited for you as well.
Well, thanks, Ashley. I appreciate you coming on, guys. And if I know you travel around and speak and do some stuff like that, or is there anywhere around the country you're going to be here soon? Or I know you go on the Financial Friends Network stuff, or how can anybody get to kind of meet you, or are you doing any of that? I know you just spoke in Vegas or something like that at some event.
I'm actually speaking on April 25th at the Dallas RIA here in Dallas, Texas, at the Marriott in Addison, the Marriott Forum in Addison. I'll be speaking. I'll be on a panel of experts there on April 25th. And I do some things with the Financial Friends Network, and just enjoying life and having fun and trying to keep up with all my family.
Awesome. Well, guys, if you want to meet Ashley in person, go down there on April 25th, I believe she said, at the REI Expo. And I appreciate you coming on. I know you got to get back to what you're doing because you're a busy lady. I know you got a number of houses you're flipping right now, so I hope those all go well for you. And guys, reach out to Ashley if you need help. She's a great person, and I'll see you on the next episode.